Well, it is a very, very busy day for corporate earnings. Already we have results from Ford, 3M, UPS. Rogers and CN are going to report after the close today. Joining us now is David Burrows. He's President and Chief Investment Strategist at Barometer Capital Management. David, great to have you here.
Good to be here, Marty.
And good to take a break. I've been flapping my gums here for about 5 minutes. Let's talk about the earnings and how they sit in terms of your team over at Barometer. Do you like what you see? Is it enough to start pushing stocks higher, or should they be pushing stocks higher?
So, Marty, we spent a lot of time looking at the way markets behave coming into the quarterly earnings, and then more specifically how the market reacts to the news as it comes out, as opposed to specifically the news itself. And interestingly, you know, coming into the quarter, we had an enormous amount of bad news hit the market. You had the stuff going on in the Gulf, you had the problems in Japan, you had, you know, concerns around the debt issues in Europe. Yet markets stayed within a few percentage points of the highs. And so coming into the earnings season, we thought that the market was on pretty good footing. Earnings revisions were higher going into the quarter. We had about the lowest number of earnings downgrades in many years going into the quarter. And so I think the market was telegraphing pretty good numbers. And I think that's really what we're getting. We're getting some pretty good numbers reported so far. About 75% of the companies are beating. Only about 11% have missed. So, and the market is taking it very well. So I think we do look like we're set up to go higher here based on what we've seen so far.
Where's the leadership going to come from again? Because you painted a backdrop that is questionable. The recovery is continuing slowly, somewhat surely.
Yeah, and you really have to pick your spots. So let's just talk, before we talk about which sort of areas in equities, let's look at the alternatives, right? You've got cash yielding almost nothing, and frankly, currencies around the world falling relative to hard assets. So there's no real win there. You know, fixed income, $1 trillion of private client money has gone into fixed income at the lowest yields in 50 years in the last 2 years, and certainly probably not a lot of room left there. High yield bonds, which were yielding 25% in 2009, are now yielding 7.5%, so they've been revalued. Yet equities were about 13 times earnings in 2009. Earnings growth has continued. They're about 13 times earnings today. They have not really been revalued. So equities, we think, are a good place to look. And then within the equity group, you want to look at secular themes. Capital spending is one. Machinery, technology in the enterprise, because corporations have lots of cash, and they're looking for productivity. You've got.
So does that mean an industrials bet, or does it mean a technology bet, or does it make them both?
I think it's both. When you look at where the strength is coming in the earnings, strength is coming in technology, expected to be up about 11%. Industrials up about 9%, and then energy would be up about 11%. So we really like the industrial theme, and you know, companies like Caterpillar and Rockwell Automation. Some of the equipment companies, specifically into energy. And then some other sectors beyond there.
And when you're looking at energy, because we say energy, and it is all sorts of companies, whether it's natural gas, whether it's an E&P company, whether it's oil and gas integrated, what do you like? Bigger the better? Small caps have been outperforming. Yeah. Some people think that's going to turn over very soon.
We had a pretty significant smaller to mid-cap weight coming into the month of March. And I will say that in general, energy has backed off from a relative performance standpoint in the last month. And I think there's, you know, you get into May, June, not a great time for basic materials or energy. So I think you want to be a little careful with those here. But the equipment companies, you know, Precision Drilling said today they're going to take their capital spending up. They're going to go from building 5 new rigs to 12 new rigs for this upcoming year. That rigs are in very strong demand, and especially the newer technology, the Tier 1 rigs, are in very short supply. So you've got to pick your spots where there's a secular theme. But I think overall, pricing power is what's important here, because the big concern out there is that inflation does get a little bit unleashed. So whether it's technology, there's pricing power there. The capital spending equipment, there's pricing power there. And then some of the other areas where there's some secular themes like data and so on.
Well, you mentioned inflation as well. We're getting a lot of questions from viewers today, well, in recent weeks. Gold and silver. Where do you stand on those, perhaps? Let's talk about the commodity first, and then whether Barometer Capital is comfortable with some of the stocks in the sector.
So the larger theme and the longer-term theme is we're in a secular bull market for commodities in general, and I don't think you want to fight that at this point. seasonally, you could get some weakness in May, June, but I think in general the theme is positive. Silver and gold we think is positive specifically. We do have some exposure in sort of mid-sized and larger growers. So we do have some exposure there. It's not a huge overweight, but it's an overweight. And I think in the basic materials, we've taken our weighting down probably to a slight underweight just because of the time of year. And some other sectors are behaving a little bit better. Canadian market, for the first time in a while, is underperforming U.S. market. So some of the multinational companies that benefit from a weak dollar are getting a real bid. And so, technology, as I mentioned, some of the consumer discretionary companies that are selling globally are benefiting as well.
And we have Rogers reporting after the close. I know you've been asked about this one in the past. It is something that you like.
Yeah, no, it's actually a company we don't own, and I think that there's pricing pressure in the wireless space, and so that's something that we'd be a little bit careful of. The first quarter is a quiet quarter. They're expected to add about 41,000 subscribers, and hopefully the pricing pressure comes down a little bit. Still, I think there's better places to look.
All right, David, great to have you back.
Marty, thanks for having me.
We're joined by David Burrows, President and Chief Investment Strategist at Barometer Capital Management. Now, coming up after the break, Greece's fiscal drama continues and looks at ways to contain inflation. Those stories are next. You're watching the First 15 on BNN.